Welcome to the Art of Procurement, the official podcast of the CatalystCo community. And our purpose is to enhance the impact of procurement by elevating the discussion one conversation at a time. Here at Art of Procurement, Catalysts come together every single week to share their challenges, ideas, successes, and perspectives on the business of procurement. Hi there and welcome to this week's podcast. I'm Philip Eidson and I want to thank you so much for listening in this week. Well, I've received a number of questions recently related to the applicability of cryptocurrencies to procurement. So let me throw a few words out to you first of all. Cryptography, tokenization, tokenomics, initial coin offerings, security, utility and payment tokens, crypto wallets, and blockchain. Now, a couple of those words I'd never even heard of before today's interview. And if some of those sound like a mish-mash of buzzwords, then today's episode is definitely for you. I'm joined to explore these topics and their applicability to procurement specifically by Charlotte de Brabandt and Henry Fudge. So Charlotte, you may recall from episode 187, is the current ISM 30 under 30 Megawatt Winner. Henry is the founding partner and CEO of Cryptonox, an initial coin offering consulting firm, and is founding partner of the Young Blockchain Professionals Network. So we start by digging into cryptography and tokenization as I explore how I could actually leverage an initial coin offering for my company, CatalystCo. And then we talk in a little bit more detail about different use cases for blockchain, with a particular focus on procurement and supply chain. Now, as I was doing some research for the show and I was talking to Charlotte and Henry, they were telling me about the area of Switzerland that they are both in, which is labeled Crypto Valley. And so I started actually by asking Charlotte if she could explain what Crypto Valley is.
Absolutely. So Zug is based in the greater Zurich area, which is truly the heart for all of the startups and pro-business minds. And Zug is known for being the Crypto Valley. Mm-hmm. So the Crypto Valley has become a hub for cryptocurrencies with investors, really a center of a financial revolution. And this hub currently, it truly explores new opportunities, and it is a future of decentralization. So it really brings together different players, like different resources, different businesses, ideas to this ecosystem, which is really fast growing at the moment. So it attracts a lot of talents, and we are all very closely connected here in Zug. And from Zug, it is really easy to connect everyone. We have different blockchain centers working together in this decentralized environment, and Switzerland actually has become one of the most blockchain-friendly places. Can you imagine even the government started supporting us in a very decentralized way? For example, if you would like to set up a certain business here in Switzerland, you can use the cryptocurrency Ethereum to set up your business. So it's a very supportive environment over here. And that's why you see a lot of ICO business building up in Zug.
So for listeners who didn't catch an earlier episode, Charlotte and I actually did a deep dive into your background. I'd really recommend that listeners check that out because Charlotte has a really diverse background and lots of different experiences. You were also recognized by ISM as their 2018 30 under 30 Megawatt Winner. So for listeners who didn't check that out, go and look at episode 187. That's 187. I'm going to include a link in the show notes. I say that as like a little bit of context for listeners to hear your background, because Henry, I'd love to know, for the context of today's discussion especially, if you could just share a little bit about what you do.
Absolutely, Phil. So, Phil, I'm one of the founders of Cryptonox. We're a financial advisory based in blockchain over here in Zurich, and we run financial advisories for a number of individuals and companies in blockchain. So we run systems like, of course, sorting bank accounts, financial advisory, relating to investors, of course, within the projects for crypto, and of course, assisting private individuals in dealing with some of their volumes of capital within cryptocurrencies.
So what I've started to do in the podcast is to ask a guest, what are some of the things that that if we're successful, a listener can take away from the conversation. So I wonder if you could share the 3 things that we should be able to return to at the end to make sure that we've covered.
Yeah, so the first point is clearly defining the difference between blockchain and cryptocurrencies.
Mm-hmm.
It is not the same thing. And many always get it mixed up, that they are certainly very different, despite them being very closely related. So most of those who advocate the blockchain will kill banks position don't really know the difference.
Mm-hmm.
And cryptocurrencies are a form of tokenized money distributed via blockchain system.
Yeah.
So that's really the first point we would like to make the listeners understand. And the second point, Henry will talk the trust issue.
The point of trust within cryptocurrencies comes basically from its reputation that it's always had. There's this negative connotation in the public eye about blockchain and Bitcoin in particular from its early days. It's very similar to the early days of the internet, unfortunately. A lot of people in the early days of the internet believed it might be just for certain types of individuals and for certain types of content. They never believed that it could have the huge expansion and the huge global dominance that it has today. There's not a single day that any of us go by without using the internet. And now fundamentally we're looking at blockchain as one of these nascent technologies that will soon be in the position that the internet is now, simply because it does guarantee trust throughout the chain of blockchain. Simply the internet as it is now is exactly what blockchain will be within the next decade.
Okay, interesting. I'd love to deep dive a little bit on that as we go through the show.
Yeah, and the third thing we would like the listeners to take away is really what can blockchain do for you?
Yeah.
And it certainly leaves a timestamped record, for example, or the information can be shared among multiple entities, or also it enables a complete transparency.
A big issue as well, when we talk a lot about blockchain, and hopefully we're going to go into some examples later in the show, because it's one thing talking about it as a concept, but I think where we're struggling a lot is what are the real use cases? How can I actually start experimenting and doing pilot programs so I can actually make it real? So I'm looking forward to getting into some of those as we go later in the show. Now, one of the things that I actually, as I started to prepare for today's discussion, I know originally we were just going to talk about blockchain, but I think a topic that I really wanted to cover before we go into blockchain was about ICOs, because it's something that I see more and more of, and yet I don't really see there be much, explanation in the public domain. Certainly not that's focused and targeted towards procurement professionals around what ICOs actually are, and if it's something that should even be on our radar or not. And Henry, I know that's a lot of your background is in the ICO world, so I would just wonder if you could explain what an ICO is to start the conversation.
Of course. Well, an ICO is an initial coin offering. Mm-hmm. It's a revolutionary means of corporate funding. Instead of, say, some of these avenues where suddenly you have to bring in JP Morgan, you have to run through an IPO, you have to approach venture capital or debt investors or anything along these lines, which takes months and months approaching accredited investors. Now you can approach straight to your core market, straight to your core audience in a retail manner to investors straight away. And it gives you a distinct advantage over IPOs. Not only do you avoid some of these significant costs of listing, the bureaucratic issues, the legal issues faced there, but now you can head straight to your core audience and literally it proves essentially that there could be a market for your services immediately, prepaid through ICOs before you even initiate business. It's not only a means by financing your project, but it also proves the concept of the market that is there for your project potentially also.
So is buying a coin or a token the equivalent of buying a share, or can a company pre-sell services in a way? So, for example, a token has a certain value that can be exchanged, for service X or service Y, and those services are actually priced in the value of your token versus priced in a typical currency.
Of course. Well, this is the beauty of the Swiss market anyway. This is why we quite like the regulatory environment within FINMA anyway, because they break down cryptocurrencies and blockchain tech within 3 distinct avenues. And that comes down to security tokens, utility tokens, and payment tokens.
Okay.
So security token, in all sense and manners, is essentially just like a stock or a share. Absolutely identical, simply distributed in a digitized version. It has all the same responsibilities and entitlements of a share. You still have voting rights there also. And if anything, it's just a more efficient means. It's still a claim on the capital and the value of the company, but simply now in the case that you are a small company running an IPO, instead of having to spend a huge amount of money trying to approach any of your shareholders, trying to keep a centralized ledger of these investors, and having to, say, run a shareholders meeting or having a large funding event like that and try and organize it, now through a simple system, you can approach all of them through the token holding system that you have a record of in a decentralized manner. You can approach them all, and they can have a clear and more democratic system of voting within the company also. But on top of this, aside from the share element, a lot of what we see going out of Switzerland is utility tokens. Now, this is simply just a prepayment for a service. So these tokens are used within their own distinct platforms. They are a prepayment for a service, say, in the case of the retail investments that you have, they can be for simply prepayment of, well, any service that you'd like, essentially, that you can put on the blockchain. It can be even for grooming a dog, even. You can have a token that would be a prepayment of the service. And the payment tokens, now we're looking more at the systems of, say, Bitcoin and Ethereum, the original intended purposes of these tokens anyway, which is for the simple payment of services through a trusted manner, digitized, of course.
So a payment token would be, it's more that you're investing in a currency. You're investing in a part of a currency which hopefully increases in value over time, whereas the other two are more specific to an organization. Was that fair to say, or am I oversimplifying things?
It depends, really, because when you're looking at the security tokens and utility tokens, usually, of course, they are dependent on a certain value element. So you're looking at, say, security token related to a company, or a security token related to a fund, any kind of UCIT or collective investment scheme. Those can be covered by security tokens. When you're looking for utility tokens, they usually relate to a prepaid service, which again is related to a particular company. But a payment token fundamentally is just simply another version of a currency. Say it's like a digital dollar, but without the peg to any kind of centralized bank. Suddenly we've broken away from this reliance on central banks and these institutions that fundamentally have, over the last decade, had a huge expansion in the monetary value and a huge collapse in the value of some of these currencies, and some of the belief in some of these currencies anyway. We're now working on a system where value itself can be stored and transferred like any other means of data, and trusted as it is relied upon by everyone within the network.
And so that's essentially where you start hearing about Bitcoin and Ethereum and all the other things that make the headlines. That's really only one part of cryptocurrency, and that's the payment token version, if you will, of crypto.
Absolutely. Payment is one small element of a huge potential market for cryptocurrency and blockchain tech. Blockchain tech fundamentally is for the efficient and trusted storage and transfer of data between parties connected into the network. So any means by which you rely on a third party or a second party with data to be transferred via the internet, in any of those cases where it is relied upon, you can always implement a blockchain within it to assist or guarantee the trust within that network.
And so for a company like mine, we basically provide products and services to help procurement professionals invest in the development of their teams and their careers. Could somebody like us launch an ICO that's a security token or a utility token, or is it really not meant for companies like mine?
So if I take that, absolutely. I mean, we could even tokenize this podcast if we would like.
In the case that we're looking to tokenize any of these elements, or any company or any value chain, you can not only tokenize companies or entities, but you can also tokenize elements within it. You can have value associated to certain investment projects. Say in the case that we're sat in the lovely building of Zug, of course. We can then have an investment in a wing of part of the building, and we can have the value of the tokens associated even with that section under the company.
So before you invest in an ICO, you should consider, I believe, 3 different elements. So firstly, look at the developers of an ICO. Who are these developers? How are they made out of? What have they developed in the past? And maybe even look at their LinkedIn profiles. or secondly, look at the white paper from the company, what they've published, because each company need to produce a white paper before they go out with an ICO. And thirdly, analyze which token currency they're using.
The tokenomics there are very strong. So from being in an economic background myself, tokenomics is now an entirely new field, of course, within economics, which is starting to blossom recently. Tokenomics relates to, of course, why any certain token does have value. So as we mentioned before, the three types that we have, security, utility, payment. Anything there has value, of course. Within economics, the basic breakdown is demand and supply. So if we look at any of these tokens, if we look for a security token, that value is derived from the fact it's related to an entity that does have value within the system. So say an investment or a object, like a car or a machine for a company. It has a distinct value in the market, and simply we've tokenized it, broken it down to smaller elements, and given it access to retail investors who can then, of course, fund these elements. If we're looking at utility, then you need to, of course, understand where it will be used. So for some of these ICOs that do come out, some of the ones that have flopped and some things that, of course, had a negative impact on the reputation for crypto, unfortunately, is that they aren't associated with their own platform. They haven't got a strong use case. If there's a token where I can't fundamentally use it within a established platform, I can't use it to purchase anything or exchange other goods, of course there'd be no demand for it because you can't use it. So when you're looking into these things, you need to know exactly where it's used, whether it's data transfer, value transfer, or for a certain service in this fundamentally named.
So at the end of the day, then you are getting a cryptographic token that you store in a wallet software, in other words.
So it's, of course, a new market. So there's a lot of things that come out nearly every single day. Crypto is a fun market to be in because every single day you hear about a new development, a new interested party, and the wallet tech is definitely developing quite heavily. So the wallet tech is essentially a means by which you can have access to the storage of your tokens there. So wallet techs are very diverse and they depend on the currencies that underwrite them. Luckily, being in Switzerland, one of the key things that has developed this huge ecosystem within Zoo is luckily the development of the Ethereum platform, which of course was founded by Vitalik Buterin here in 2014, which has led to a huge amount of clustering here of professionals who are using that platform. And now Ethereum underwrites the entire market for alternate currencies, essentially. It dominates the issuance of other currencies called ERC20 tokens. They're essentially tokens that are written on the Ethereum platform.
So if I back up then, so as a buyer, I can buy tokens which can be security tokens, so it's really like stock, that are utility tokens that are prepayment of services, or that are payment tokens, which is essentially a cryptocurrency. And then all of those kind of everything that I hold is then held within a wallet. And that's essentially the system of record, if you will, for everything. And then do I use that, essentially the technology or the service of that wallet, is that how I then use to transact those tokens that I now own?
The wallet is mainly for the storage of tokens that you own, the private key that would access your piece into the network. Fundamentally, the histories of the transactions and ownership are based within the blockchain. The beauty of a blockchain, essentially, is that if we are transacting information or value, any source of data that can be stored within the blockchain, the records and the ownership of these transactions are proved by the network and sealed within a block, which is added to the chain. Essentially, to hold any of these elements is to hold a record of the entire history of any of these assets or information's transfer through this network. A wallet tech simply gives you access to the network. It's a storage and a proof where you may hold in a secure manner your access to the network.
So if I come back, and I'm only using like what I do in my company as an example to try and represent, essentially trade, the ability to buy from suppliers, the ability for suppliers to fund themselves, in different ways than would normally be typical. So if I have created a particular product within my company and issued utility tokens, perhaps as a way of funding the development of that product. So now I have a lot of buyers who have prepaid for whatever it is that the product is that I put into the market. What's their expectation in terms of being able to then spend that token? Is it within a certain time period? are these valid for infinity? I'm interested in the mind of a buyer in who would actually be buying a utility token for a service that I don't yet have, but that I'm putting into the market.
Well, as a creator of a utility token, fundamentally this is the proof of concept that there's a market for your goods.
Mm-hmm.
So say in the case that you are having a podcast with a private subscription, as an example, if you issue a utility token out for, say, the first 3 podcasts, access to the first 3 podcasts as a prepayment, then suddenly you have a large amount of capital from people who are demanding that podcast, who want to listen. Suddenly now you've proved the market there because there is demand for it. So they've bought the utility token for it. Now you have the capital by which to fund any of your microphones, any of the tech that you use to produce it, any of the co-hosts or guests that you want to have on, celebrity guests, things along these lines. You can now afford to do so. With this, you now have these individuals who've bought the token and can redeem it in exchange for the services that you had already sold originally. It means by which you get up and running and prove the market.
Right.
One of the most difficult things for entrepreneurs to do, to prove there's a market for the services.
Yeah.
And after that, that's the fundamental use of the utility token. But now we often see that within this, there's often people who are trading the utility tokens for a investment return, which is, of course, not the initial use of a utility token, but it is one of the beauties of having a free market for these things, that the value can be determined by the market. And that can always lead to yourself having a better indicator of the price of the podcast.
Yeah.
Say in the case that you listed, say, it was £2 as an access to the 1 podcast, and so you pre-sale 3 podcasts at £6 a piece, and 10,000 people buy in. They want to have a token, 10,000 people want to listen. Suddenly it becomes popular. Suddenly the issuance and the successful issuance leads to an increase in the interest in the podcast.
Yeah.
Now suddenly you're getting a secondary market for these tokens. If you have access to an exchange, or simply if you want to trade them peer-to-peer between other interested parties, then suddenly you can see an appreciation in the value of these tokens, all set by the market. So now not only have you proved and funded a market for your services, you've also now determined a fair market price before you've even started for what your service could potentially be.
That's fascinating. So it feels so... It's really interesting, like, having this discussion, because when I set out 20 minutes ago in ICO, I kind of understood what it was, but not necessarily the potential and how it's not just the domain of a tech firm or a company who is trying to bring a new currency into the world. There's some real time practical uses, and it kind of has my mind thinking about how I could apply that to my business.
Absolutely. Well, the funny thing is, Phil, is if you're looking at, say, where blockchain is today, if we look at the S-curve of how we're actually going to implement some of these technologies, how it's suddenly going to pick up, think about the early 90s. We're looking at the very dawn of the internet. Now, can you think back to the days of the connotations of the thoughts people had about the internet? Fundamentally, we're looking at an age where people were simply on weird forums commenting about technology or simply sci-fi shows. You never could have expected the huge implementation and the absolute upheaval of markets has occurred under the development of the internet. We are right now just at the very start of the S-curve for cryptocurrencies. We're at the start of the part where we are going to revolutionize and finally have the implementation that the internet should have had for access and digitalizing any of the assets that we can see in this world. Suddenly we can move away from paper insurance contracts, paper stock certificates, and simply going from meetings to meetings, writing these things in hand, getting approved and stamped by actuaries, things along these lines. We can finally go from this element, this slow element, and we can finally embrace what the internet revolution should have been. When you're looking at a technology like blockchain, of course, an incredibly complicated thing to try and program or understand with a deep knowledge. But fundamentally, look at the way that we interact with the internet today. As an idea, felt like, of course, not every single person who accesses the internet is a developer, can write Java or can understand these things. The ultimate adoption of blockchain will happen when it is simply a back-end solution. It's simply going to be integrated, and you won't even know that you're using a blockchain solution. You'll just be a beneficiary of the trust that it provides. So when we're looking at the adoption, we don't need people to be technological innovators. We don't need people to be educated heavily into how to run or operate a blockchain. It won't be bootstrapping via GitHub anymore. It'll simply be that you'll use it and not even know it's happening. It's like using the internet now. Not many people know how to program.
Right.
Simply it. But with the market for ICOs, what we saw originally was this revolutionary, almost a financial Jacobin movement of people trying to throw off the shackles of central banks or large investment houses. We've moved from this where people are privately investing in ICOs, want to fund projects and throw off the cash to the banks. There you had a huge direct-to-retail market in investment solution. From now, we are also seeing a small slowdown in the volume of money as a percentage which is coming from a retail market. We're looking at a number of large institutions like, say, BlackRock as a particular investor that is now seeking options through blockchain and crypto for investment. We're now looking at a number of private sales where now realize the old institutional investors are now realizing the opportunity this presents. So we're looking now at the start of the uptick of the S-curve, because now we can see the value generation, we can see the investments coming in.
Now, that's interesting, because then it goes from, as I think about my own personal example, you know, the audience or potential audience of people to sell a token to moves from people who know me and know what I do and are interested in procurement and believe in the value that we're trying to bring and are also interested in cryptocurrency, which is a very, very small number of people, to essentially investors who are looking at it as an ROI decision.
Absolutely.
So let's go into, because I could probably ask a bunch more questions on crypto itself, but I want to talk a little bit about blockchain as well. You know, as we've had all the conversations around cryptocurrency, I know we said this at the beginning, but I just want to kind of level set because it's easy to get a little bit off track in terms of the understanding of how all this fits together. So where does blockchain then fit in the world of cryptocurrency that we've just talked about?
Well, the blockchain technology continues to be one of the most exciting emerging technologies in the world today. And in fact, blockchain is an underlying enabling technology. So Bitcoin and the other digital cryptocurrencies are one of the first effective applications of that technology in theory. Yeah. So a blockchain is literally a chain of blocks or a list of records noted and secured by cryptography. And each block of these chains really contain a set of similar transactions or pieces of information.
And so the blockchain is essentially the platform on which everything else that we've talked about so far today is built.
Yeah, and it allows a network to manage information in a distributed form without the risk or loss of alteration.
The fun thing is with the value that we look at on a blockchain, fundamentally, value is simply another data point that can simply be managed better through a blockchain tech. So when we look at crypto is simply an application of blockchain technology for the distribution and trust of value as an information point. Yeah. The blockchain can apply itself to any system by which you have a third or second party and you trust them in information. Okay. That can be identity, that can be healthcare data, that can be insurances, nearly any system where there's information being exchanged between parties and a reliance or trust on that data. It can all be better managed through a blockchain or DLT tech.
So I want to talk a little bit about use cases for blockchain. I actually had a previous podcast. I wanted to refer that now. It was episode 129 with Jack Shaw, talking a little bit about the details of what goes behind the blockchain, how it all comes together. I'd say it's more of an introduction to blockchain. I didn't want to focus on that today, particularly just to refer any listener who wants to have a bit more of a deep dive into the pipes of blockchain, if you will, and how it all works. I'd really recommend you go and listen to that episode. That's episode 129 with Jack Shaw. What I wanted to do with the time that we have available for the rest of this conversation was actually to talk use cases, because we mentioned at the beginning one of the takeaways is like, what can blockchain do for you? We talked about blockchain in the crypto perspective, but what are some of the things that are tangible? And I'd love if you have any examples that you could share that may give listeners ideas of, you know what, that's something that actually I could do with my company today. That's a pilot that I could start, or that is something that I could perhaps apply to my business.
Well, absolutely. Well, Phil, you'll actually be surprised potentially about some of where blockchain has actually been applied so far.
Right.
So if you're looking, say, at the FMCG industry anyway, if you're looking at food in particular under that, within food supply, when you're looking at, say, organic certification or free-range certification, there's an estimate that between $10 and $15 billion of fraud occurs every year simply in the mislabeling of organic or free-range foods when they're simply not. Or say in the case that they contain allergens, also often mislabeled, which leads to, of course, lawsuits now involved.
Yeah.
With a blockchain tech, you can finally have a trusted system by which you can verify on the blockchain that is immutable by any of these parties that any of these elements might be true. In the case of supply chain for fashion industry as well, say in the case where you'd like to say that it was ethically sourced from a local manufacturer within Italy, finally you can have a blockchain system for the recording of the data and the origins of these products. So finally we can be guaranteed about the certification of products as good for the environment or good for the local community or as a positive influence. Because no one, of course, who's looking to purchase at a bit of a premium some of the goods that might be handmade in Italy wants to find out that they might be produced in some of the worst conditions in the world in factories in, say, Vietnam, Myanmar, or any of these third world countries that have significant usage of child labor also.
Yeah.
It's something that we can finally guarantee that reputation.
And if I may also add, just blockchain specifically in procurement and supply chain, there is definitely tremendous value of blockchain for procurement professionals, looking at smart contracts, also supply chain finance, or also an increased supply chain visibility and traceability. For example, taking smart contracts, they create the potential to eliminate the transactional responsibilities of accountants and accounts payable and also the whole invoice management. This would allow companies or also suppliers and other relevant parties to access the very latest information about the contracts and the transactions at any point. It saves time, it saves costs, and also the whole effort, really, of doing the whole due diligence. So blockchain could enhance the security of corporate contracts in that sense. But secondly, looking at supply chain finance, blockchain may make it possible for suppliers to better leverage supply chain finance programs by helping banks, for example, to confirm whether a payment should be released or not. And thirdly, the major factor is the traceability.
In the case for supply chain finance, there's recently been a very large development, of course, by R3 Capital, an innovator using the Corda blockchain system. It's a DLT system for registering of trade finance and letters of credit. So for international trade, of course, this is going to facilitate international trade. Generally, we're looking at letters of credit that will clear in paper, very old world, handwritten signatures transferred between banks, holding and releasing of funds. It's a very long and outdated system. Now, if we're looking at the way that R3 Capital has been working with HSBC and ING, they were working with Cargill out of Geneva for a shipment of soybeans between, I believe it was Argentina and the US, if I recall. This usual letter of credit that they had between the two banks to finance between Cargill for this transfer would usually settle between 5 and 10 days. Now we're looking at a trade time that took only 24 hours. And that's at the higher end. That was with a lot more legal processes that are, of course, so to verify that the system is working. This can be cut down to a factor that can be around the ballpark of 10 minutes, even less than that potentially. Now think about the potential opening up of liquidity within companies that can generate, making sure that credit is available at every source and every section of every company globally. We're looking at treasury management facilities now that can be instantly transferred within seconds, especially through things like the Ripple network. Say in the case that you have large multinational companies, say in the case that they're looking for local areas to have certain volumes of treasury to make sure that they can cover any of their costs or any of their transactions at a certain point. Now you can have a central liquidity management system where you can immediately distribute capital from any entity between each other and have a record of these transfers constantly.
So why are procurement professionals and organizations investing so much time exploring the subject for so long? And what can we expect from it? I ask myself this question all the time as being a procurement specialist myself, and procurement's intellectual curiosity has been demonstrated with the planned or actual implementations of technologies, including artificial intelligence, what we talked about during the last podcast, or robotic process automation, or machine learning, cognitive computing, etc. So these examples serve as proof that the transformation we have pursued is taking place at a foundational level. And it's now the start to think into the future and think beyond what will happen next. Yeah. And we already see actual examples in many different industries how blockchain is really being applied, and how many companies are already trying to explore the wide opportunities which blockchain will bring to us. And also, suppliers I work with, they are now looking at smart contracts and what benefits they can get out of that in particular. So especially in the logistics industry.
So I know that it's time to wrap up. I want to just come back to the three points that we made at the beginning of the show. So we talked about defining blockchain and cryptocurrency. We've covered a lot about the trust that blockchain brings, and also what can blockchain do for you. We've shared a couple of different use cases. So as I think about the final question, it's often really hard to know where to start. We talked about a lot of different examples and a lot of companies. There were a few names that were discussed. But for somebody who's actually listening to this and thinking, okay, where do I begin? To me, with a new technology, maybe this is the wrong approach. It begins with what's out there in the market today, what suppliers actually exist, where there's actually use cases already demonstrated, and how can I then apply that to my business? So as you think about that, how do you find suppliers or platforms, or where should you even begin to start finding suppliers or platforms that are already doing things to talk to understand if what they do can actually be applied to your business?
Well, I think it's exactly what we're doing, listening to podcasts, reading up on a lot of information. There are so many blockchain hubs worldwide. There are so many academic institutions which are all aligning, which are all exploring the wide range of opportunity. And it's a lot of research itself. For example, the diamond giant, De Beers, they also use the blockchain technology to track the stones from point to point and try and how would we know who the suppliers are? So it's really just research and word of mouth and getting educational access.
Yeah.
So one of the best ones that I've learned from reading a small part of Ray Dalio anyway is it's not about what you don't know, it's how you approach things that you don't know. It's making sure that you have the open-mindedness and the ability to deal and take on information and bring yourself up to speed with new concepts. Of course, blockchain and DLT and crypto is a very complex and new industry to think of. But simply even 5 minutes a day of looking at some of the recent updates, keeping aware and abreast of some of the innovations that go on in the market through things like, say, CoinDesk, is actually how even I got into the industry. Simply, even 10 minutes a day, you start realizing how exciting and how innovative the industry is. And that's where a lot of the founders over here you find in Zoo, how their interest in, simply was piqued just from being interested within the ecosystem of innovation that is going on.
All right, so where would be a good place for listeners to actually go then to reach out to either of you? I'm thinking of LinkedIn profiles, websites, and I'd love to include those in the show notes.
Okay, so for myself, you can, of course, find it through our website, cryptonox.ch. Otherwise, of course, I'm always happy to speak to any of the listeners through my LinkedIn profile anyway. It's one of my favorite social medias.
Yeah.
And I know, of course, that Charlotte has a very active approach on LinkedIn also.
Yeah, absolutely. So through my LinkedIn, Charlotte de Brabandt, or also through my website, charlottedebrabandt.com.
Okay, perfect. Well, what I'll do is I'll include both your LinkedIn profiles and your websites on our show notes today. Those show notes are going to be at artofprocurement.com/crypto. That's artofprocurement.com/crypto. Charlotte, Henry, it's been a fascinating discussion, lots of food for thought. So thank you very much for joining me.
Thank you, Phil, for having us.
Likewise, Phil. Pleasure speaking to you.
Thank you. Hi there, it's Phil here. I want to thank you for listening into the show today. And I just wanted to let you know that we've recently developed a series of lunch and learn sessions and deep dive workshops to help procurement organizations elevate the impact of their teams. So they integrate the collective knowledge and insights of Art of Procurement alumni with the real world experiences of my team and I. Topics for these workshops and lunch and learns include performing an organizational self-awareness and developing a roadmap and prioritization plan that elevates the role of a procurement team. They look at developing a procurement branding and positioning strategy, developing the future skills required for a procurement team, strengthening supplier relationships, and strengthening stakeholder relationships. So Lunch and Learns take the form of an online 90-minute to 2-hour session, while workshops range from 1 to 2 days, and I deliver typically those workshops at a location of your choice in person. Both our Lunch and Learns and the workshops, they focus on developing roadmaps and a plan of action. So for us, it's so important. It's all about taking action. So to learn more, just email us at contact@artofprocurement.com. That's contact@artofprocurement.com. And myself or a member of my team will be delighted to get back to you as soon as we can. So thank you for listening to today's pod, and I hope to see you again next time.